Let me show you one of the most expensive tax mistakes I see after someone inherits property. It usually happens during an incredibly stressful time, and once it happens, it really can't be undone. Okay, I want you to look here on screen. In this example, a property was originally bought years ago by a relative for about $300,000. Okay, at the time of that relative's or family member's death, it was worth $900,000. Okay, now here's where people get tripped up. They assume the original purchase price still matters for tax purposes because they're thinking about it like it's their own. So when the property is sold for 950,000, okay, they think the taxable gain is 650,000. That leads to a tax bill of roughly $160,000 that relative who inherited the property now has to pay. Now let's look at what actually happens under the tax code, and your CPA should know this. In most cases, inherited property receives what's called a step-up basis. That means the tax basis resets to the property's value at the date of the death of the individual. So instead of a $650,000 gain that you got to pay taxes on, the taxable gain is now only $50,000, okay? And then your tax bill drops roughly to $12,000 from 160. You can see the example here of how much money you save if you do this right and you get a CPA involved immediately, okay? Same property, same sales price. The only difference is understanding one rule before selling, making sure your CPA puts it to the step-up basis. Okay? Inherited assets are one of the most misunderstood areas of tax. The biggest mistake isn't selling, it's acting before you understand the tax consequences. This is why when people win the lottery, the first call they make is to a lawyer and the second one's to a CPA before you do anything, before you even receive that money. You need to make sure you get it right. Same thing with inherited property. Now, this is a simplified example, but the tax impact is very real. Some people inherit way more than this. This is why it's so important that you speak with a qualified and licensed CPA before decisions are made, not after. Because once it's made, it's too late.